Hey traders, let's take a look at a trade that we could have taken on Bitcoin. So this trade is based on candles and the wicks. So technically it's about candle signs. So every candle has a top and bottom wick both. So here you can see that for Bitcoin, okay, these are the amount of wickless bull and bear candles. So if you add them up together, it's around 1%, right? So here you can see that before this was created, before this 4-hour candle on the 8 a.m. on the 8 p.m. was created, um, it had no bottom wick. Okay, so I was expecting a bottom wick to be put in. Okay. Yeah, so firstly we mark out the open. Okay, we mark out the open of the candle. So tentatively we want to buy above the opening price. Heading to 1 hour, there's no POI. 30 minutes too. Now we are at a 15-minute time frame. So we have tapped into the 15-minute bearish order block, which is the most extreme. Okay, good. Now 35 minutes. So I was actually expecting price to tap into the 5-minute bearish order block. So let's use the replay button. Okay, like this. So we'll be waiting it out. So okay, we try and look to the 1 minute to see what price can give us. So here price did a, so you see as price comes up to the order block, okay, there's a lot of POIs. There's some scattered 1 minute fair value gaps and point of interest. So best if we go to even higher time frames. So here you can see that on the 3 minutes price is creating bullish fair value gaps towards the upside. So we will do anything about it first, right? Because there's signs of bullishness. So here you can see that price did a CISD, but in fact price is just reacting off, right? As in here CISD, but price is just reacting off. So yeah, so this CISD here is just a sign, right? So in this case the CISD didn't work because the order blocks all still hold, right? The order blocks all still held. So let's see. Okay, so here say not yet, nothing's happening here. Okay, we're still creating bullish fair value gaps. Okay, so as you can see, as price hits upwards we start to lose momentum. Okay, because this high and this high, the distance is quite big, but this high and this high, it's small. This and this is small. So bullish price action is, the bulls are switching hands with the bears right now. So here you can see is there any bearish fair value gaps created along this leg? No, right? But now we've started to create bearish fair value gaps. So here you can see that on 3 minute we created bearish fair value gaps with a CISD. So that's the most important part. So you see okay, in this leg there's really no bearish fair value gaps. So we really have to look for bearish point of interest, like the fair value gap, right? Since all these fair value gaps are created on the 3 minute, we have to look for a 3 minute bearish fair value gap to validate our argument. And so this will be in fact this is a change of character. Okay, so afterwards I guess you can enter shorts here. So be mindful, here is there's no wick here. Okay, so let's check. So as you can see on the 3 minute time frame, there is way more wickless bull and bear candles, which is around 18%. Okay, so the percentage of 18 is quite high, so it's okay. Okay, so it's best that we enter fast. As you can see, 3 of these candles literally have no top wick. Okay, so yeah, stops as usual above the extreme high. Okay, and okay, but in this case we are doing sniper entry technically already, and because we are looking for confirmations on the very low time frame already, right? First is 15, next we go 5, the next we go 3. Okay, so to confirm that even more, we hit to the 1 minute. So 1 minute, yeah, the 1 minute just tells us this. Okay, so let's take a look on the 1 minute. Okay, price can just drag off and come up all the way. Okay, so let's mark this extreme zone. Okay, so as you can see what happened, price actually on the 1 minute time frame, right? You see the price reacted off this, it mitigated this bullish order block to come up even higher, and then the actual dump happened, right, creating a very sharp turn. So you can see that on the 3 minutes, yeah, after a CISD, price has to mitigate opposite imbalances on the lower time frame to come up, right, and this will stop out a lot of traders, but this gives us the best risk to reward ratio, right? So after the confirmation here on the CISD, we will always hit to the 1 minute, right? CISD should be identified on the higher time frames, right? So on 3 minute, you see that there's a mitigation and price came up. So yeah, we only have a few seconds to react on it, right? So after the price comes up, we can enter because it came to the extreme, right? So you see now the RR is very good. Yeah, so always have to take note, okay, that price is always mitigating opposing imbalances. So once it comes up, even though we create this bullish fair value gap, but afterwards we will create some sort of bearishness, right? And in this case it's a very sharp turn. So to be incredibly safe, we can wait for price to hit upwards here without creating any bullish point of interest. Okay, so let's see what happens. Okay, so price just reacted off this fair value gap, right? It didn't bother going up to the order block already. So it gets swipe enough liquidity, so we can target this lows for a 1:3.7. Okay, let's see how price reacts. Yep, as of right now it's like this. Yeah, so we reacted off this bullish fair value gap, but expect price to hit towards this place. So let's see how it goes. Okay.